Have you ever wondered what happens when the most powerful currency in the world starts to fall apart? Warren Buffett once called Bitcoin rat poison. But what if I told you he's the rat? Because right now, something shocking is unfolding. Bitcoin, once dismissed as internet magic money, is quietly flipping the script. It's not just surviving, it's crushing the US dollar, and whether you believe in it or not, we may be witnessing the start of a new global financial era. So let's break it down: what's happening, why it matters, and what it means for you. What's really happening? For more than 100 years, the US dollar has held the crown as the world's reserve currency. It's been the symbol of power, trust, and reliability. But something's changing, slowly at first, now faster. In recent years, Americans have seen something that was once unthinkable: the value of their money melting. Whether it's groceries, gas, rent, or healthcare, prices are going up, but your dollars aren't stretching as far. We hear about the 10% return of the S&P 500 over the long term. But here's the catch: the US also printed 10% more money every single year for decades. The result? A hidden tax on your savings. It's called inflation. And it's why many are turning to Bitcoin. Bitcoin doesn't rely on central banks. It doesn't ask for permission. It doesn't bend to political pressure. It has one promise: only 21 million will ever exist. That hard cap is what gives Bitcoin its power. It's like digital real estate: scarce, secure, independent. Compare that to the US dollar, which can be printed with the push of a button. One is finite, the other is unlimited. This is why many believe Bitcoin is the next chapter in the story of money. Why Bitcoin is exploding right now. Bitcoin isn't just surviving, it's dominating. Let's look at the numbers. Since its inception in 2009, Bitcoin has outperformed every other major asset. Gold, up 181% since 2015. Real estate, up around 100%. S&P 500, up 200%. Bitcoin, up 35,000%. And if you zoom out to its entire history, the returns are even more mind-blowing, over 20 million%. But here's what makes that explosive growth even more interesting. We're still early. Only about 14% of Americans own Bitcoin. Compare that to the 62% who own stocks, and the 65% who own real estate. That gap? It's where the biggest opportunity lies. Public companies are catching on. Tesla added it to their balance sheet. MicroStrategy owns over 3% of all Bitcoin in circulation. BlackRock and other major asset managers are buying in through ETFs. Even the US government holds Bitcoin, now worth tens of billions of dollars. Bitcoin is no longer just a tech experiment. It's becoming a mainstream financial instrument. How the world is quietly switching. This isn't just a US trend, it's global. Governments around the world are starting to recognize the value of Bitcoin. Countries like El Salvador have gone all in. They've made Bitcoin legal tender. Their citizens can buy groceries, pay bills, and receive salaries in Bitcoin. And nations are watching closely. China, Russia, and Brazil are exploring central bank digital currencies (CBDCs), while quietly acquiring Bitcoin. Over 260 plus organizations now hold Bitcoin on their balance sheets. That includes hedge funds, family offices, pension funds, and sovereign wealth funds. And here's the biggest shift. More than 65% of investors say they plan to add Bitcoin or digital assets to their portfolios in the next year. Even financial advisors, once resistant to crypto, now recommend it. Some suggest allocating up to 10-14 of your portfolio to Bitcoin. Why? Because over time, Bitcoin has beaten every other asset class, even with its volatility, even with the crashes. And if it keeps gaining traction as a global store of value, the upside could still be massive. Can Bitcoin really replace the dollar? Let's talk about the big question. Can Bitcoin actually replace the US dollar? Or answer, overnight. But long term, it might not need to replace it completely to be a major player. Here's why. The dollar has lost 26% of its purchasing power in just the past 10 years. Bitcoin, during that same time, has grown more than 350x. It's not about replacing the dollar, it's about offering a credible alternative. When trust in traditional currency systems weakens, people look for better options. Gold used to be that option, but gold is hard to move, hard to divide, hard to secure. Bitcoin? It travels at the speed of light and costs next to nothing to send. Skeptics like Warren Buffett and Charlie Munger argue that Bitcoin has no intrinsic value. But many of those same people also missed Amazon, Apple, and Google in their early days. Now, we're seeing some of those skeptics change their views. Larry Fink, the CEO of BlackRock, once called Bitcoin the currency of criminals. Now, he runs a Bitcoin ETF. The narrative is shifting. The hidden dangers you need to know. Bitcoin isn't perfect. Let's be clear about that. It's extremely volatile. Price swings of 20% in a week are not uncommon, and the emotional roller coaster can lead to terrible financial decisions. Let's look at the 3 biggest dangers. 1. Overconfidence. When prices are soaring, it's easy to believe you're a genius. That's when people overinvest, over-leverage, and overreact. It rarely ends well. 2. Emotional trading. Greed, fear, FOMO, and regret. These emotions drive impulsive decisions that often lead to big losses. 3. Scams and misinformation. The crypto world is full of noise. Fake coins, pump and dumps, rug pulls. You need to do real research, or you'll get wrecked. Smart investors know this. That's why they treat Bitcoin like a long-term bet, not a lottery ticket. What smart investors are doing right now? You don't have to go all in, and you probably shouldn't. Most seasoned investors are doing one thing consistently: dollar cost averaging. That means buying small amounts of Bitcoin on a regular schedule. Weekly, monthly, rain or shine, high or low. This strategy takes the emotion out of investing. It keeps you consistent. It protects you from buying at the top. They also limit exposure. Instead of betting half their life savings, they invest 1-10 of their portfolio, depending on their risk tolerance. And many use Bitcoin reward programs like credit cards that pay you in BTC instead of points. These small strategies help build long-term exposure without needing to time the market. Because timing is nearly impossible, but time in the market, that's how real wealth is built. What if it works? Future predictions. Let's dream for a moment. What if Bitcoin keeps winning? What if it becomes a core part of global finance? Here are some expert predictions. $100,000 to $200,000 in the next 2 to 3 years, $300,000 to $1.5 million by 2030, Robert Kiyosaki, to dollars. 4 meters per coin, Cathie Wood's bull case, $10 million per coin by 2050, Michael Saylor's model. Sound extreme? Maybe. But remember, Bitcoin has already done the impossible. From under $1 to over $60,000 in a little more than a decade. And as more people, institutions, and nations adopt it, the ceiling keeps rising. The biggest returns always go to those who see value before the crowd. So, what should you do? Here's the truth. No one knows exactly where Bitcoin is going. Not me. Not Wall Street. Not even Satoshi. But here's what we do know. Bitcoin is changing the way people think about money. It offers something the dollar can't. True scarcity, and the earlier you understand it, the better prepared you are for the future. Invest what you can afford to lose. Stay curious. Be patient. Don't chase the hype, and don't panic during the dips. Because whether Bitcoin hits $1 million or stays flat for a decade, being financially informed is the most valuable investment of all. If this video helped you, give it a like, subscribe, and drop a comment. I read every one of them. Thanks for watching, and until next time, stay smart, stay steady, and stay ahead.